Let's take it over to Alan Knuckman now. He is the Chief Market Strategist for St. Paul Research. Hello to you, Alan.
This stock seesaw may be seeing a shift in sentiment. In recent sessions, we're seeing buying of the dips as a sign of stability.
What's your trade for this week, Alan?
All right, this week's trade trigger again is in Apple. Apple's pullback is 10% off its September highs, again, all-time highs there, and it's up 7% in 2021, which is half of the NDX, the index, which is its biggest stock. So we've been mostly between 140 and 150 for the past 3 months now in Apple. That target's a breakout to 160, it's new highs. That super support is the bottom of the channel at 140, so we're gonna lean on that. Now also on Friday, we saw new multi-month lows and a higher close. That's how a bottom gets built. So we're looking at a January option. January is 3 months of time. January 135 call, again below that 140 level. It's deep in the money. It's trading for about 12 or so, but it's got 3 months of time and a high delta. So this is a way to position for the longer term recovery rally in tech and especially Apple.
Let's get your trading day takeaways. Alan, what are you watching in this market?
All right, trading takeaways. Trading takeaway number 1. 1 month woes. One. All right, let me just say that again. We've had woes now for 1 month. It's not been a long-term downtrend. The markets have pulled back. Tech has tumbled from its October 7th high. It's about 10% off, or it was about 10% off. Once again, we've seen over and over. And a V recovery in tech in the NDX targets 17,000, which is another 15% higher if it does what it's done every time in history. Number 2, test and reject. The VIX, the fear factor in spooky October, was less spooked than when the S&P on these new swing lows was less spooked than it was when we saw the markets lower back in October. So that's a very positive sign. You're seeing a bit of divergence there. Even though stocks made new lows, the VIX did not make new relative highs. And number 3, drop and pop. The S&P 2-month plus swing lows were Monday. They were erased and we're building a solid bottom base here at 4,300. Now, the question is, can we bounce ahead of earnings season as we've done in the past?
Always good to have you here. Thank you so much, Alan.
Thank you.
Go to businessfirstam.com for where to see our show on TV.